normally dominated by gold, the second half by silver. The silver market is more of a momentum-oriented market. The gold market is more of a fear-oriented. That silver is a late cycle mover, which is to say the first half of a bull market is normally dominated by gold, the second half by silver. The silver market is more of a momentum-oriented market. The gold market is more of a fear-oriented market. So I think that silver is increasingly being viewed as a strategic metal, although perhaps not by the general public. If the gentleman is referring to a strategic metal in a non-monetary sense, that is to say its use in microelectronics and particularly its utility in solar power, understand that these solar panel arrays don't work without the reflective property of silver. Silver is already coming to be recognized in that fashion. With regards to investor appetite for silver, I believe myself that the current Silver Fan Club still views silver as a monetary rather than an industrial material. And I would point out to that crew that, at least in my lifetime, in the two precious metals bull markets that I have enjoyed in my lifetime, that silver is a late cycle mover, which is to say the first half of a bull market is normally dominated by gold, the second half by silver. The silver market is more of a momentum-oriented market. The gold market is more of a fear-oriented market. So those people who are wondering why, with inflation at a nominal 6.5% and probably really at a higher percent, why the silver price hasn't moved yet, need only consult the 1970 to 1981 bull market, where silver was a very late mover, or the 2000 to 2011 bull market, where the same circumstance happened. I think that reputable bullion dealers with reputable storage will have customers who experience losses. I think the answer to that is no. But if you're talking about a system-wide circumstance, while we may not have a run, we will absolutely, I think, have what feels to most people like a shortage. Let me explain that, Dunnigan. I've talked about it before, but not in the context of this question. The market share of precious metals and precious metals-related assets relative to other asset classes in the United States is less than 0.5%, which is to say less than 0.5% of all the savings and investment assets in the United States are comprised of gold and silver. Remember that 40% of most institutional accounts are held in bonds, which means that 40% of most people's portfolios, most institutional portfolios, are losing money now. As the biggest institutions in the world begin to disintermediate the bonds, that has to go somewhere. And some of it will go to gold and silver. As we've said before, it is estimated that the 3-decade mean market share of precious metals and precious metals related securities is between 1.5% and 2%. If some of that disintermediation from the bond market goes into gold and silver, which I suspect it will, if gold and silver merely revert to mean in terms of the market share, demand for precious metals and precious metals equities somewhere between triples and quadruples. And that's what I think is going to happen. When people talk about the silver squeeze, they're talking about a whole crowd of young investors who've done actually a wonderful job educating themselves as to why they should own precious metals. But the real squeeze happens when the biggest institutions in the world add precious metals back to their balance sheets. They were all there in the 70s. They all know the way, although the people who put that precious metals, who probably now put that precious metals in those portfolios, have probably deceased. But I'm highly confident that over the next 3 or 4 years, you will see the largest institutional investors in the world reallocate to precious metals, both gold and silver. And that's where the squeeze will come in. The squeeze will obviously be interesting in the futures market. where there is small enough physical coverage relative to the daily trading volumes that it secures. But I suspect that you'll see shortages other places. I believe ultimately, Dunnigan, markets work. And the way you solve a shortage is you raise the price. Something that I, as a gold and silver holder, sort of look forward to.
When you talked about in your...
The answer to that in reverse order is that I try. But how do I say this? My personal investment technique is to try to establish a value in my mind for any investment that I go into. I worry about the value before I worry about the price. Let's say that I decide that the net present value of XYZ gold mines is $1 billion. I define net present value as the discounted free cash flow from reserves and resources over the life of mine. And let's say that I think the company's worth $1 billion, and let's just say for fun it has 1 billion shares out, so it's selling for $1 a share. Pardon me, I think it's worth $1 a share. But it's only selling for 50 cents a share, which is to say I think it's worth twice what it's selling for. Well, that's pretty attractive to me, so I buy some stock. Let's say, just for fun, that the gold price goes up. If the gold price goes up, then the net present value of the free cash flows increases. And so I need to recalculate. If the gold price goes from $1,800 to $2,000, that is, the gold price goes up by 10%, likely the free cash flows go up by 20 or 25%, which means the net present value goes up by 20 or 25%. So rather than being worth $1 billion, it's worth $1.25 billion. And I need to recalculate like this all the way through with regards to a company that's generating free cash flow that can be valued in this fashion. If, by contrast, I'm speculating in an exploration stock, what I'm speculating then on is the probability of a set of circumstances which de-risks the project coming true. Let's say that a company has a mineralized anomaly, a surface expression, but we don't know if it has the third dimension. In other words, we know the length, we know the width, but we don't know the depth. The question, when the circumstances behind the reason that I think it's going to go up change. So let's examine those reasons. We've done this before on your show, but I know that your viewers cycle. The first reason why I believe precious metals are going to go up, and understand that the principal reason, in my experience, why precious metals prices escalate is because investors and savers are concerned about the purchasing power of other savings and investment instruments, particularly those denominated in fiat currencies. So let's figure out why people might be afraid. The first is quantitative easing. We've talked about this before. Quantitative easing, the fact that 35% of the dollars in circulation have come into existence in the last 2.5 years. Quantitative easing is counterfeiting. It isn't like the economy's grown by 35%. We didn't need to accommodate an increased float of currency because of increased economic activity. We did it by creating more specious currency units. This is counterfeiting, and increasing the supply of something, in particular the spurious supply of something, lowers its unit value.